And good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Sunday, May the 7th, 2023. Interesting day on Friday, to say the least. Whether I agree with what the trade was or not is really unimportant. I feel that I needed to make a change to how I was viewing it and how I was going to count it. And so let me just kind of back out a little bit, take that off, and let's take a look. I had left this as minor 5, and that would have been an intermediate wave C and a primary B wave completing at that point. This then I felt could be minute wave 1, minute wave 2. It has not broken any rules yet. We have that up at 13,370. And as interesting as it is, wave 2s, our second waves, can retrace nearly 100% of wave 1 before reversing again. When I go out and I look at the cash markets from last week, let's just kind of take a peek at the NDX and see what kind of picture we get. We kind of are left with 3 down. So that kind of puts this into a little bit different position. It could be minute wave 1, minute wave 2, 1, 2, 3, 4, and we get a 5, and we're going to be done with minute wave 3. And then we get a 4, and then we get a 5 to complete. So taking it back over to the NASDAQ, to the futures market. What does that portend? Well, it tells us that probably this isn't minute wave 1. This is likely minute wave 2, and we're inside a third wave. Now, if we're looking at that, wave 3 would be equal to wave 1 at 13,568. A little bit higher, and then we're probably looking at 13,637, somewhere up in there. So where are we in all of this? Well, we're not really coming off. We're not really doing anything. We're up 3. We're on hold. We got to wait for everybody else to kind of wake up and come in and see what they want to do. What else could it be? I've changed this labeling so that I can reflectively show what I will use as an alternate count. But until it breaks 13,370, which was this high, then it's not violated any rules. And it could definitely be wave 1, wave 2. I'm leaning away from that based on the cash market, in which case we're looking for a continued upside. And what we're likely in is a 1, 2, and this is maybe 3 of 3, or somewhere up inside of there. And we let it pull back, and we do another rally, and likely start to get up above wave 1. That's 13,370, and start heading up towards 13,400. That would be the logical path. Now, again, when we look at to say, well, what's going to create that? I don't see that anything has changed. I'm not going to read into this rally as if, okay, that means the Fed's going to pivot. Oh, that means they're going to pause. Oh, that means that the employment situation numbers from Friday were really good. It's like more people did find jobs. So there's less people unemployed. And again, in my heart of hearts, yep, I like it. It's a good thing. But in the fight against inflation, no, bad thing. And it's a dichotomy because your brain's kind of going, how could it be bad to work? And I get that. Secondly, we're not getting anything from the Fed other than they intend to meet their goal in inflation of 2%. That when asked, are you considering a pause or moving forward? Chairman Powell basically said no. So again, he's reiterating no. Now, he did change his language and a couple of things he did say differently, but I went over that on Thursday. What's the difference between Thursday and Friday? Apple's earnings came out, but even then, when Apple's earnings first came out, they ran the stock to 171. They backed off right away, brought the stock back down below 168, and finished that session back around 168.50-ish, or maybe up towards 169. It wasn't until Friday morning when the U.S. came in that suddenly Apple's earnings blew the doors off. That Apple was like very, very positive, et cetera, et cetera, et cetera. And it was reflected in the stock. Zipped right to 171, and they kept going. So the overflow of the rally went into other stocks such as AMD, all of them, Amazon, Google, et cetera, et cetera, et cetera. We had a few stocks down, but then Microsoft caught fire. AMD started to catch fire. And some news between Microsoft and AMD, and Microsoft supporting artificial intelligence for the development of the chips with AMD. Oh, okay, that was all great. So the market's mindset is kind of switched over to, okay, all news is good news, and this is now just going to go up and up and up. One more thing I want to add. The characteristics of a B wave, whether I think that this is the end of the B wave or minute wave 1 of 5 to complete minor 5. I'm still counting this as a finishing move to complete a primary B wave. And that primary B wave fits all the criteria. And that it's got strength, it's not clear, it's got a lot of zigzags, it's got a lot of junk in between, but strong rallies nonetheless. Base it on earnings. Well, we got Apple. I mean, they did great, et cetera, et cetera. So in other words, it's like they chew it, and they spit it back out the way that they want. But let me just say that it is, in my vision, my point of view, it is still inside the primary B wave. So no, I'm not looking for this market just to take off and not stop, because now we're moving forward. Nothing's really changed. And that's the important thing. Nothing has really changed. Perception has changed. The way that CNBC, Bloomberg, and the financial media want to discuss it has changed. Who they're pulling in to sell airtime has changed. Talking about, it was retail who really came in, investors as they're called, really liked Apple's earnings. Okay, that doesn't surprise me. But they hung their hat on Apple carrying the entire weight of a rally to wherever it's going to go. We've already heard from the other titans. So they're just riding on the coattails of Apple right now. How long can that last? Could last a while, I agree. But I'm thinking in my mind, okay, so I believe that we're going to get ourselves above 13,370. We're pretty comfortably above 13,300 right now. And head on up towards 13,400. Now let's go back down to the hourly chart and take a peek, because here we have for wave 3. Wave 3 would be equal to wave 1 at 13,568. Now, again, remind yourself, if we're inside of the B wave is deceptive. The B wave is just going to kind of go. The B wave can just really make you believe that it's like the whole world is like wonderful and rosy and clear, and let's just go, go, go. And if they trade it that way, as a day trader, there's no excuse on why you should not be able to just jump on and make money. If that's what they're going to do, you jump on and make your money. Am I going to try to position myself? No. No. Do I think that we still will have something out there that's going to shake them up and turn, boom, and drop? And there's plenty to choose from still. So again, I want to ask, if you want to comment like, no, we're in a new secular bull market, or no, we're in a bull market, or the bulls are in control, You need to give me more than, well, the Fed's going to pivot. Because the talking heads are discussing it doesn't make it gospel. And the Fed's going to have a pretty dang good reason. Oh, yeah, well, the banking sector. Sorry, that they already chewed up and spit out. Right? Banking sector recovered. Well, that just helps the whole rally. That just helps the whole case. So we need some solid reasoning as to why this market should just continue to go up. In the meantime, for tomorrow, I would suspect we may get a little bit of a continuation of this little pullback off of Friday's highs, which were 13,359. Previous high, 13,370. So I think once that's gone, we should pretty much make a beeline towards 13,400. It's above there where we start to take a peek. So we have 13,400, where we have resistance just a point below, not even a point. But then above that, we have 13,450, I'm going to call it. And then we kind of drop into a little bit of what I call a black hole. And then we're up at 13,568. And that's going to be where wave 3 would be 100% of wave 1. That could happen. I would expect wave 3 to go a little bit higher. So we continue. And as it continues, I'll be able to add points so that we can start to narrow down a lot of these just larger gaps in a move. But right now, I think maybe we get a little bit of an additional move down, and then we continue to move higher. Now, mind you, with the amount of things that are still hanging out there that are quite negative, we have a debt ceiling problem. We have a government that's just does not look like they're going to try to come to an agreement. 42 out of 49 senators, or however what their minority is, are basically saying we would not vote to raise the debt ceiling unless we get some answers and some cuts to spending. And the Democrats and the president are basically saying, no, that's not going to happen. We can't. Well, then we're going to go into default. It's not just a game of chicken, folks. You need to kind of pay attention to what could happen should it occur. Whether you want to think it's a big should or a non-effective should, you need to take a look at what could truly happen if it does. Just because we haven't done it lately or ever does not suggest that it won't happen. We have two opposing sides that are pretty firm in their stand right now, particularly the Republicans. They're pretty strong on how they feel. That can happen. We've got a very, very hot geopolitical situation still going on in the Ukraine, with a lot of pandering, a lot of verbal whatever coming out of Russia. So there's still plenty out there that could really affect our markets. I think this next week we have CPI, PPI. Let me just take a peek. And we have, on Wednesday, we have the CPI. On Thursday, we have the PPI. So on Tuesday, we get two Fed governors talking, all during market hours. So, Monday, tomorrow, only thing we really have is wholesale inventories. And the Chicago Fed president is doing a television interview. So not a whole lot until we get towards midweek. But we do have. So, you could hang your hat on it. Nope, you may not. Right now, looking for a little bit lower to finish what should be a small fourth wave, and then an additional high, and I would be at some point expecting more closer to 13,450. Now, What's it do for the larger count? Like I just explained, it only changes it on the minor level, not on the intermediate degree, which is still in the intermediate wave C, and not on the primary degree. It would still complete wherever it ends up, a primary B wave. It's how we're going to get there. Over in the S&P, it actually is the same story. It truly is. If I mark this as the 4-hour chart. So I still had that problem that the market really needed to, for wave C, it needed to get above wave A, and that's at 4250. But I considered it to be a small failure. Now, I have to tell you, each time I do that, I think I invite the danger all by myself. Because I've done that before, and the market just kind of takes its time. It starts a decline. It's like, oh, yeah, I see, you were right. Then suddenly stops and just launches, just absolutely launches, and takes it right out of my hands. But mind you, it's right back at 4150 in the S&P. This has been their comfort zone for quite some time. Actually, the month of April for sure, and now we're into May, and it's still hugging around it. So if I do the same in the count, come down here, 1, 2. What's that look like in terms of what a third wave should begin to put in? Let's just put our extensions in. I know you're going to tell me, wait a minute, wave 2 exceeded wave 1. It's another irregular. We're getting them all the time now. At the same degrees. ABC, X, ABC. So it's a double. And it fits. Now, what are we doing here? 1, 2, 1, 2, 3, 4, 5, 3, 4. And we're going to probably get a pretty powerful 5 because I would expect it, right, to come up to almost 4,200 again. And right there, we got 4,206. So I'm looking for it to break that high. And then in turn, when we go back out to the 4-hour chart, we're looking for it to eventually break the high of wave A at 4250. Well, we have resistance at 4250. 4250, not 4150, 4250. We do have resistance there, 0.618, which will fit the bill, and 1.382 in terms of a third wave. So can we rally 100 points? We can. We certainly can. What they're going to base it on? B-wave. B-wave mentality. B-wave trading. It all fits. So not much to be adding. We're not getting any concrete evidence outside that inflation is easing. We will find out more this week from the CPI and the PPI numbers. I am going to leave it right there. No, I do not believe that we're in a secular bull market. Nope, I don't believe that a new bull market has started. No, I don't think that the Fed has got a whole lot of room to pivot and or not raise. So, not according to what I'm hearing from the chairman. Things change. We'll see. We're going to take it one day at a time here. Moving averages, they've turned. The 50s turned, but the 20 and the 50 need to cross over that 100, and that's just on the hourly chart. So we had all of this strength, and the 50 and the 20 are still below the 200. If it turns and goes down from here, then we're back into the other count, where this is 1, 2. A lot more room. A second wave under the other count that I showed, that this is minute 1 and we're still in minute 2, it has room up to 4,206 before it becomes invalid. We shall see. So basically in both markets, as I've just stated, the count presented last week still remains in the picture. We'll see. Should not take us too long to find our answers. And that's where I'm going to complete it for tonight. Our next update will be on Monday, May 8th.